On London Plus tonight, a special look back at the story that's dominated the news in the southeast this year, the horrible weather. We'll be looking at the lessons learned and the price paid after the snow, the storms and the floods.
The film beginning on 2 in a minute is set in the underwater world of The Silent One. This is BBC One.
The 6 o'clock news from the BBC with Nicholas Witchell and Philip Hayton.
Good evening. The headlines at 6 o'clock. The city went back to work today with a bit of a crash. Billions of pounds were wiped off the value of British companies because of continued concern about the state of the dollar. Ethiopia says Britain is hampering the fight against famine by withholding development aid. Mission accomplished. A Soviet spaceman returns to Earth after almost a year in space. A record. Also tonight, the superpowers and their leaders at the end of '87. In the year ahead, will Mr. Gorbachev have to rein in his reform? Will he and Ronald Reagan sign another nuclear treaty in Moscow? And who will be next in the White House? Plus, the saddest sale of the season, the dogs who were given as gifts this Christmas. Christmas cheer ran out in the city this morning. Within minutes of the money men returning to their desks, the market was falling sharply, and £14 billion was wiped off the value of British companies. The reason, once again, the weakness of the American dollar and worldwide anxiety that the dollar's decline could continue. At one stage this morning, the 100 index, the best barometer of the city's spirits, was down 78 points, and the dollar fell 3 cents against the pound. Later, there was some recovery. The index ended the day down 60.8 at 1,730.3. The dollar closed in London down those 3 cents against the pound at 1.86. When the Wall Street market in New York opened 4 hours ago, it started steadily, but later fell 12 points. Some dealers say today's falls were no more than a correction. Others, though, are repeating the warnings heard earlier in the year that until the United States takes decisive action, the difficulties will continue.
Worldwide, stock market jitters affected London as soon as the markets opened this morning. Trading was light, only about 2/3 of a normal day, but within 5 minutes the index of the top 100 shares was down by nearly 80 points. After that, things picked up slightly, but most shares were down, even those of the big store groups, in spite of some huge trading by shoppers in the post-Christmas sales. The reason was obvious: continuing worries that the Americans are not doing enough about their financial problems, their widening trade gap and their huge budget deficit. That has led to the dollar falling again to its lowest level yet in Japan, which has a huge trade surplus with America and huge investments there. Last January, £1 sterling bought $1.47. At one point today, it would buy $1.86. Worries about the dollar were a big contributory factor to this year's stock market crash. The FT 100 share index had started the year at 1,679. Then it boomed steadily, reaching its height in August at 2,443.4. Then came Black Monday, October the 19th. It fell that week to 1,795. Now it's even lower. This afternoon, there was an attempt to rescue the dollar by the big government banks, including both the Bank of England and the American Federal Reserve. Until now, its glaring absence from the market had helped the dollar's slide.
I think the fundamental position of the UK economy is such that we shouldn't be too troubled. The economy is growing strongly. The prospects for investment are very buoyant for next year. And I think the Chancellor has left himself sufficient manoeuvrability to ride out most of the next couple of months or so with this uncertainty in the American background.
Over in the United States, things were calmer. The stock market on Wall Street was quiet when it opened, helped by news that the dollar had picked up slightly after the bank's help, and a statement from one of President Reagan's spokesmen that any further decline would be counterproductive. That appeared to reverse an earlier statement from another advisor, which had set off the slide before Christmas. So tonight, a relatively relaxed city, with many of its important dealers still on holiday, appeared to have weathered the immediate storm. But it's still uncertain about what lies ahead in the new year.
1987 has been a very good year for the Austin Rover Car Company, with production up by 14%. More than 468,000 cars were built at the Cowley and Longbridge plants, and 1 in 3 of them were sold abroad. It's an increase of nearly 60,000 on last year's total. Today's good figures follow last month's announcement that the whole Rover Group will make a profit this year for the first time in 3 years.
The government has confirmed that it's to introduce productivity checks for National Health Service hospitals. Under a scheme to be introduced in the new year, hospitals will have to say how many patients they treat every quarter, give details of waiting lists, and submit income and spending figures. One of the aims is said to be to enable health ministers to ask why some hospitals appear more efficient than others. The Ethiopian government has accused Britain of keeping back millions of pounds of development aid because it claims Britain disapproves of the way the Marxist regime there is running the country. A news conference at the Ethiopian embassy in London was also told that the British attitude is hampering efforts to help famine victims. This afternoon, Britain's Overseas Aid Department said there was no question of withholding famine relief, but it pointed out that European community countries had frozen most of their development aid because Ethiopia refused to relax its central control of the country's agriculture. Britain's share of that amounts to some £30 million. But in food aid and other emergency assistance, Britain had pledged more than £28 million this year alone, much of which is now being delivered.